This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill. Markets move fast, and if you're not ahead, you're under. The peace pivot just hit a brick wall. Let's get you caught up. The 60-second commodities flash. President Trump has officially dismissed Iran's counterproposal as totally unacceptable. The deal reportedly lacked nuclear enrichment caps and demanded an immediate end to the blockade. Negotiations are now officially back in the dead zone. Over the last 24 hours, the UAE intercepted 2 Iranian drones. And Qatar reported a drone strike on a cargo ship in its waters. The ceasefire is effectively dead on arrival. Brent crude has surged back to $103.92, while WTI is climbing toward $98. The market is pricing in a return to kinetic activity. While gold slipped slightly to $1,600 per 10 grams due to a powerhouse dollar, silver is refusing to budge. It's holding near $2,190 per kilogram, driven by a massive supply squeeze and industrial panic buying. Meanwhile, uranium is holding its 15-year high at $120. With the Middle East proving to be a permanent risk zone, global utilities are racing to lock in nuclear fuel at any cost. Let's dive deeper. The 48-hour hope for a peace pivot has officially evaporated. Trump's rejection signals that the U.S. is doubling down on maximum pressure. For the commodity markets, this means we are moving from a pause back into a full liquidity siege. Here is why this week is going to be brutal. Last week, traders hoped for government-backed insurance to reopen the strait. With the peace deal rejected, that hope is gone. Private insurers are hiking war risk premiums. We are seeing a bifurcated market. Only state-owned tankers or dark fleet vessels are moving, while commercial trade remains paralyzed. Reuters is reporting a surge in tankers exiting the strait with their AIS transponders turned off. This is the return of the shadow liquidity market. When the formal system breaks down, trade goes dark. This makes oil prices incredibly volatile because the true supply is no longer visible to data terminals. Look at the decoupling of industrial metals. Copper and uranium aren't just trading on demand, they are trading on national security. The US and China are both racing to secure fortress commodities. The physical location of the commodity is now more important than the price on the screen. The peace trade was a trap. We are back to a high-tension environment where $100 oil is the new floor, not the ceiling. Expect $110 Brent to be tested by Wednesday. Stay liquid, stay sharp. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.